Although today's markets remained relatively strong throughout the day, the Dow finally closed back at or below the T-line area, close enough to say that there's still no decisiveness in this current trend. And we can see what happens. There's a trend and it moves sideways. The markets move sideways for a while. There's a trend and it moves sideways for a while. So knowing that that's the characteristic of this current trading of the markets, you got to pretty much assume you're going to be moving sideways until it either breaks out to the upside or back down again. That does not eliminate the possibilities of being able to find good long and short positions during these sideways market. The NASDAQ did do a bullish harami today that closed right at the 3T line. But your stochastics are not in the oversold area yet. So there's still a little bit of question, or there should be a question, that as long as you're below the T line, there's still not a clear indication there's been a change of investor sentiment. This trend could continue in a downward direction. If there is no major change of investor sentiment, short positions that have been established can stay short as long as it meets the criteria that you have not seen any buy signals and a close back up above the T line. And the strength of the signal, as in the short position on SPWR, is based upon very simply analyzing that you had a bearish engulfing signal right at the same level it topped out before, closed below the T line, then did a bearish doji sandwich, a big day with a doji sandwiched in between, which usually indicates there's going to be more downside. And all we have to do is watch to see when the stochastics get back to the oversold area and what type of signals you have. But remember, the further away you move from the T line, the higher the probability you can see a reversal. But at this point, there's nothing to tell you there's any change of investor sentiment. You can stay short as long as you stay below the T line. And knowing that a specific sector, such as the weed stocks, after they did a sell signal and a close below the T line, you could stay short. And what was the additional evidence that this should be in a downtrend? You can analyze that the whole trend of this sector or stock has been down, and every time it hits a resistance level and or closes back below the T line, the downtrend continues. This is not rocket science. This is merely identifying the signals that tell us that the bears are in control, and then adding some other simple indicators that confirm that trend is still in progress. And even in a sluggish market, you can identify what strong trends you have or bullish moves based upon the pattern, in this case, kind of a fry pan bottom J hook, and it did it with a belt hold signal. A belt hold signal is simply where they gap it down away from the trading range and bring it right back up into the trading range. Any bullish confirmation from there is enhanced by the fact that they took out a lot of sellers in here, but the bulls still maintained control, which means there's less sellers in the way, making the uptrend that much more probable. Today, the strongest signal as far as the big traders was Apple being upgraded, producing a little kicker type signal, coming out of this wedge, also creating a little rounding bottom, but staying above the T line. So the prospects are that it probably should come back up into the trend channel. That kicker signal, even though it was created by an upgrade, is still indicating what the investor sentiment was going into the close today. So the visual aspects of candlestick analysis, it greatly enhances your analytical ability of telling you what is going on in specific trends based upon identifying the signals and patterns that show you what the most bullish or bearish investor sentiment is doing to a price trend. That'll be it. We'll see you in the chat.